Right now, while most of the crypto market remains distracted by short-term noise, a much larger shift is unfolding under the surface. From Bitcoin's quiet rejection at critical resistance to bearish signals on Ethereum, Solana, Chainlink, and XRP, we're seeing a rare alignment of indicators that could reshape the next few weeks in crypto. In this video, we'll break down what's really happening with Bitcoin and major altcoins, and what most traders are getting completely wrong. We'll also look at the latest inflation numbers, what they mean for interest rates, and how that could impact crypto markets in the near future. This is the ultimate macro to micro breakdown, tailored for traders, investors, and anyone who wants to stay ahead in crypto. Let's get started. Let's begin with the bigger picture, the macroeconomic environment, because it's setting the tone for everything happening in crypto right now. This past week, we received updated data on the US CPI inflation rate. The numbers came in at 2.4% year over year, which is lower than the expected 2.6%. On the surface, that's great news. It suggests that inflation is cooling and approaching the Federal Reserve's long-term target of 2%. But the market's reaction was surprisingly muted. Why? Because despite the positive data, the probability of an interest rate cut at the upcoming May 7th FOMC meeting remains low. As of now, there's roughly a 72% chance that the Fed will leave rates unchanged, and only a 28% chance of a 25 basis point cut. So, while inflation may be slowing, it hasn't convinced the Fed to shift course just yet. That hesitation is dragging on risk assets, including crypto. Until there's stronger confirmation of rate cuts, expect continued market uncertainty and lower volatility. Now let's move into the charts, starting with Bitcoin. On the daily time frame, we have a confirmed bullish divergence between price and the RSI. This suggests that in the short term, we may see some relief, potentially sideways movement or modest upward price action over the next 1 to 3 weeks. Historically, bullish divergences on this time frame tend to play out over a period of 7 to 21 days, depending on broader market sentiment. However, this is a short-term signal, not a reversal. Zooming out to the weekly time frame, Bitcoin continues to flash bearish signals. A bearish MACD crossover back in late January has remained intact, and bearish divergence continues to weigh on price structure. So, while the daily chart hints at a short-term break from the downtrend, the broader trend remains weak. Key levels to watch: resistance zones, 84,000, 88,000, 92,000, and 96,000. Support levels, 75,000, 74,000, and the broader zone between 70,000 and 74,000. Also, an attempted double bottom breakout at 80,000 failed recently, invalidating the bullish pattern. That failure reinforces just how strong resistance remains overhead. Conclusion: expect a temporary bounce or sideways consolidation, but not a major breakout unless resistance zones are decisively cleared. Now let's look at Bitcoin's liquidation heat map, a tool that helps identify where leveraged positions are likely to get wiped out. We're currently seeing small liquidity pools forming around 74,000, and more significant concentrations around 85,000 and 89,000. These are areas where the price could be pulled in the short term, acting like magnets. Price tends to gravitate toward these zones, so keep these levels in mind when considering both support and resistance ranges. Moving on to Ethereum, things are looking grim from a long-term perspective. The breakdown below the 2.6K to 2.7K support zone marked the official transition from bull market to bearish structure. As long as ETH remains below this region, any rallies are likely to be short-lived relief moves. Currently, Ethereum is holding above $1,400, with some near-term support between $1,400 and $1,550. But if this range fails, the next major support sits around $1,100 to $1,000. There's still no bullish divergence on the higher time frames, and volume remains weak. That suggests bulls aren't stepping in with conviction yet. Until ETH reclaims 2.7K, the broader trend remains bearish. Solana has also entered a tricky zone. After a sharp rally, SOL was rejected at $120 to $130, a zone that previously acted as strong support and is now acting as resistance. This rejection aligns perfectly with the idea that former support often becomes resistance when broken. Despite the rejection, a daily bullish divergence is forming on the RSI, hinting at potential sideways consolidation or minor upside over the next few sessions. However, this short-term signal is battling a much stronger long-term downtrend. Support zone $90, resistance zone $120 to $130. Solana remains bearish until it can reclaim and close above $130 with conviction. Next up is XRP, and this chart has been consistent for months now. XRP remains trapped in a descending parallel channel on the 12-hour time frame, and the 3-day chart still shows a large bearish divergence in play. There's short-term support around $1.74 to $1.75 where we've recently seen a bounce. However, several strong resistance zones lie ahead, $2.14 to $2.15, $2.47 to $2.55, and major resistance at $2.65. Unless XRP breaks out of this descending structure, expect continued bearish pressure. Chainlink is also flashing some temporary bullish signals while still being stuck inside a bearish trend. A confirmed bullish divergence on the daily chart points toward short-term relief, but the price has already hit resistance around $12.80, which aligns with a Fibonacci level from a previous uptrend. Unless Chainlink can break and hold above $13, don't expect a full recovery. The next resistance zone lies around $15, with even heavier resistance at $14.90 to $15.50. Chainlink, like other altcoins, could see sideways action or slight rallies, but until it breaks long-term resistance, the bear market remains intact. So where does this leave us? Let's recap. Bitcoin short-term bullish divergence confirmed, but long-term structure remains bearish. Ethereum broke bull market structure, lower support now in play. Solana, facing textbook resistance, minor bullish divergence offering temporary relief. XRP still descending, any upside likely limited unless trend is broken. Chainlink, similar setup, near resistance with minor relief potential. Macro conditions continue to weigh on crypto markets. Despite improving CPI numbers, the Fed is still cautious. Until rate cuts are more likely, momentum in crypto will remain constrained. This is a market caught between short-term optimism and long-term caution. And that's where many traders go wrong. They zoom in too far and lose sight of the larger trend. So how should traders approach this environment? In choppy, uncertain markets, it's critical to use tighter stop losses. Target smaller, more realistic gains. Trade with the trend. Only take longs when support holds and confirmations appear. Fade the hype. Don't chase green candles after they've already broken out. If you're trading crypto right now, choose platforms that offer low fees, flexible leverage, and strong liquidity. Two platforms that are currently trending among pro traders are 2bit and BTX. With 2bit, traders can claim up to $50,000 in bonuses, including a $30 sign-up bonus, a 20% deposit rebate, and automatic VIP Level 1 fee discounts. No KYC required, accessible worldwide. Check your local regulations. If you're looking for alternatives, BTX offers a 10% lifetime fee discount, also with no KYC. Check the description for links. We're in the middle of a pivotal phase in the crypto cycle. Don't let the noise fool you. There's no need to panic, and no need to FOMO either. Watch the key levels, track the divergences, observe how price reacts around critical zones. The market always gives clues, you just need to know where to look. If you want to learn how to trade in any market condition, bullish, bearish, or sideways, check out the videos linked on your screen now. One covers how to profit in downtrends, and the other shows how to capitalize during consolidation phases. Thanks for watching, and we'll see you in the next update.